Hey guys, this is the Trading for Dummies series brought to you by Mastermind Trading. Introduction. In the previous video, we looked at supply and demand zones as well as their relationship with order blocks and order block trading. Now in this video, we want to look at flip zones as they relate to supply and demand trading. Stay with me, guys. Before anything else, it is important to understand the concept of a flip zone as well as how they relate to supply and demand trading going forward. Now, a flip level basically is a level in the price chart where you find prices breaking a significant structure for the other side. So let's say we have a support getting tested, broken, and then prices begins to go down. That level where that support got broken is where it's referred to as the flip. Now a flip zone refers to those demand or supply zones or those order blocks that you are going to find along that level that the flip took place. Usually traders will want to see prices moving into those zones for them to actually jump in the direction of the trend or in the direction of an opposing trend. Now, when looking to trade flip levels, traders can be looking to go in the direction of the overall trend or in the direction of the opposing trend. So basically there are two types of flip pattern. We have the reversal pattern and then the continuation pattern. Now the reversal pattern basically refers to, like the name implies, those flip zones that can be found when prices is reversing from a prevailing trend. So let's say we have a bullish structure building up in the market and then price takes out the higher low of the structure. Now usually you will find a supply, a demand, a order block or something of significance along that level of flip. Now what traders that looks to trade this reversal flip would want to wait for price to get to that order block or that supply and demand level for them to go now in the direction of the new trend. Continuation flip, on the other hand, are these supply or demand levels, supply or demand zones, order blocks, structures that you can find along the flip, the break of a structure for the continuation of the trend. So let's say we have a bullish structure, price broke above the previous high of the structure for the continuation of that uptrend. Now, what traders who pay a lot of attention to these flip levels would want to be looking at ordinarily, they would want to look for those demand and supply zones that forms up along that level that the break of structure took place, and then wait for price to pull back into that zone for them to jump in continuation of the trend. So guys, this is basically the two type of flip zones, flip trading that we have, looking at it in relation with supply and demand trading. There are other ways that traders look to trade flip zones, but I am making this particularly in line with our core concept of supply and demand and market structure. I remain Monaco Daniel, the mastermind trader from the world's most populous Black nation. I'll see you all in the next video.